Afropolitans, we are speaking to Lukman Otunuga, who is a research analyst at FXTM or FXTM, joining us from London. Lukman, if we do take a look at a lot of the news headlines and taking into cognizance that we're speaking to a South African audience who don't really know what the mood and the environment is like in Britain at the moment, give us an understanding as to what the feel is like for average citizens. Yes, they voted for Brexit and wanted to go ahead. However, I understand that there's several issues that are quite contentious that they would like to have cleared up first.
Please, may you repeat the question?
What is the feel on the ground like for the average UK citizen? Are there significant concerns that they would like to be addressed, even though they have voted for the Brexit deal to go ahead?
The overall is there's a lot of uncertainty. That's what we're feeling here. Uncertainty reigns, and this uncertainty can be reflected in sterling because although Theresa May has got a draft Brexit deal from EU leaders, it's just the question is what is the next step? How are we going to move forward, and what type of exit are we talking about? If we do have a situation where Parliament does end up rejecting the deal, this raises the prospects of a hard Brexit or no-deal situation, and such may result in a deceleration in economic momentum in the United Kingdom. However, if we do have a situation where Parliament moves forward and actually goes forward with the deal, sentiment is likely to improve in the UK.
What's the difference between a hard exit and a smooth transition and separation from the EU?
So a hard Brexit will be a situation where nothing is agreed, and it's a situation where the UK just ends up just crashing after the EU with actually no deal. But if we do have a softer situation, there'll probably be ease of access, ease of transportation between the UK and the EU.
Lookman, if we also take a look at the economic impact of such, I do know it might be difficult to quantify, but how substantial is this to businesses and institutions within Britain?
It's the case of uncertainty. With uncertainty mounting overall, what a hard Brexit or no-deal situation, naturally businesses may be hesitant to invest, and this lack of investment is likely to translate to a slowdown in economic momentum.
Let's swing it into the African perspective now. We are in South Africa, one of the leading economies on the African continent, and the UK is actually one of our most significant trading partners. Just earlier this year, Theresa May herself paid a visit to South Africa as well as other economies on the continent, Kenya and Nigeria to be specific. But how will we, as emerging market economies on the southern tip of Africa, be impacted by the ongoing negotiation regarding Brexit?
I mean, when we look at the South African economy, we know that the UK is a large importer of South African goods. The UK imports wine, fruits and other precious metals. So this is we could actually have a situation where there could be a knock-on effect. So if a hard Brexit or no-deal situation becomes a reality and economic growth in the United Kingdom ends up decelerating, this could actually impact the demand from imported goods from South Africa. And we know that South Africa is currently in a technical recession with GDP at 0.7 in Q2. So this could actually have some impact on the nation's recovery.
That's unfortunate because there's technically nothing we can do about this. We just have to wait and see how things unfold. But on the currencies front, Lukman, I commented on how the British pound is performing against the South African rand, and that's clearly no doing of our own, but a weakness of the British pound. How do we see this unfolding until there's further clarity, or even up until March 2019?
Yeah, so the outlook for the British pound actually remains. It hangs on how markets or how investors react to the whole Brexit outcome. If we look at the UK economy, there's some telling signs that this whole Brexit uncertainty has actually slightly impacted the health of the UK, and this uncertainty has translated to a weaker pound. And when we keep in mind that the Bank of England is very hesitant to do anything, I mean, speculations are even moving of the Bank of England potentially even cutting rates if the situation gets too bad. The outlook for the pound tilts to further downside. But when we compare this to the South African rand, The South African rand is also fighting its own trials. We know that South Africa is in a technical recession. We know that we are in a high interest rate environment, meaning that the Fed is expected to raise interest rates in December and possibly further in 2019 if economic data warrants. And when you factor in how this ongoing trade tensions have actually left the global risk sentiment fragile and impacted appetite for emerging market currencies, the South African rand could also be exposed to some downside pressure. So when we're looking at the outlook for the pound and the South African rand, it's a matter of question which currency is the most weakest. If we do have a situation though next year in March 2019 where it looks like the UK is going to crash out of the EU with no deal in place, the South African rand could shine against the pound.
Goodness. Tough times, certainly, and we look forward to seeing how this does develop and unfold. And of course, Lukman, we're looking forward to getting your feedback as this does continue to get more perspective from the Parliament of the UK. That's Lukman Otunuga, who's a research analyst at FXTM, also known as Forex Time. Now, if you're sitting as a South African and thinking, yeah, this might not affect me, I think Lukman made it very clear about the fact that our trading conditions with the UK will be quite substantial. And let's also not forget that we have a lot of South African companies that have companies and are based within the UK itself. If you think about Investec Bank, if you think about famous brands through one of their outlets, Gourmet Burger or Kitchen, and even Mediclinic as a hospital group having exposure into that market. So either way, ripple effects will be felt substantially.